Hello, good evening. It's the 29th of July, and today makes exactly 100 days since the Bitcoin halving. That's pretty cool because previously, following previous halvings, kind of Bitcoin didn't really get to rally or start going up again following halvings till at least 100 days out, and the average or the mean actually was 150 days. So if we apply that here in Bitcoin, it means actually we could still be in the summer chop going sideways, and it would fit with kind of what we've done with previous halving cycles. And if we take a look at Bitcoin's seasonality, which is a little bit disappointing, we can see that this is average returns as long as Bitcoin has been in existence. We can see that August is a pretty ugly sideways month. September is the worst month of the year. And then in October, we tend to see a pretty nice rally, more than 10%, September, October, November. And so that's kind of where we are in the Bitcoin cycle. If we take a look at where we are, this is a monthly chart of Bitcoin, spot Bitcoin. We can see that the last time we traded sideways in 2023, we started in April. We went sideways for 6 months before we made a bottom and continued higher again. And if we look at where we are, we're still only in the 5th month. If you think about it, again, this was March, so we started a month early, and we've been going sideways. So whilst I feel very good and I thought everything looked really good this morning, we have failed again at that 70,000 level, and we'll talk about chart patterns in a minute. And so we're really still in this sideways corrective zone. I have to say though, this price action, this choppy sideways, not giving anything back, every dip gets bought kind of sideways price action is very bullish. It gives us some really bullish structure to launch from. So I'm not feeling really depressed about this at all. The other thing to remember is from in previous halving cycles, it took 500 days following the halving for Bitcoin to peak. So here we are 100 days. That means we still have another 400 days from here for Bitcoin to peak on average. Now, it seems to me, that each halving the bounce gets a little bit smaller and it gets a little bit quicker, but that's still quite a lot of time, And so again, this is not a guarantee that that's what's going to happen again. It's just kind of what the environment is and what the most likely pattern is. No guarantees, of course. So last week we had some really bullish macro stuff going on for Bitcoin, not least of which was the Bitcoin conference in Nashville. And basically Bitcoin has become an election issue, which I think is quite something. However, I'm not a big fan of everything that was said. I think it's really good for Bitcoin if they do compete to be most pro-crypto. But some of the things they're proposing is, it kind of goes against my libertarian views. So, Bitcoin used to be a kind of off-balance sheet, private form of currency that you could share or pay and buy and sell without government control. If the US government is going to build this massive Bitcoin or a Bitcoin stockpile or reserve, then that's, to me, is kind of one step away from a central bank digital currency. In the Federal Reserve, in their open market operations, they're not authorized to purchase anything except government bonds. They cannot buy Bitcoin. All of the Bitcoin that the government holds is Bitcoin that it's confiscated. It hasn't contributed or bought and they don't really have any strategic reason to buy Bitcoin because they don't have any use for it. We have seen, when governments have big stockpiles of Bitcoin, what happens? We had 2 weeks ago, that everybody thought that the world was ending and Bitcoin was going to 40,000 again because the German government was selling a small amount of Bitcoin that they had confiscated. And so the idea that the US government is going to have a massive stockpile of Bitcoin, to me, smacks of pretty ugly government control. So I'm really not a fan of that, and I'm not sure how they're going to do it. Bitcoin is not an asset, it's cash. It's very volatile cash. It's not backed by anything, it's digital. The US government already has far too much cash already. You know, when they print, because they print money, and when they print money, they devalue it and it becomes, you know, it's a debit on our national balance sheet and in our bank accounts. You know, if inflation is 2%, that means the cash in your bank account every year is worth 2% less. So I have to say, I'm really dubious about this government Bitcoin reserve. I don't think it's going to be good for Bitcoin, but that's just my view. I don't think it's a financial asset for governments, and I think it kind of takes away from what made Bitcoin kind of really good. So there, I've got off my soapbox now. So here we are in sideways consolidation in Bitcoin. Let's talk about the patterns we're in, and let's talk about the other problem we've got. So ETH ETFs have started trading, and there were some outflows last week, which was a little bit of a negative. So over the weekend into this Bitcoin conference, ETH was underperforming Bitcoin. It looks to me like most of the selling comes from Grayscale because their pricing structure is wrong. And I do think that this will turn around, and I think it's just a correction at the moment based on that, but I'm open to see. So that could have been a pretty nice positive for Bitcoin last week. So here we are in our sideways correction. In terms of a little, if this was going to be a little bullish flag in this sequence, really we should have launched from the low that we made in May in this bigger ABC. But what we see now is kind of a little bit of a bigger ABC pattern. I'm going to go down to a daily chart here and look at where we are. Because if we look at this first swing lower that we made, we can see that we rallied up to the 886 for 786 and then initially, and then the 886 fib retrace. What's the 886 fib? I can see people saying, well, if the 786 is the square root of pi, 61.8, then 886 is the square root of 786. That's how you calculate it. So we did this first swing up to the 886 fib. From this swing here, we went up to the 886 fib and we double topped. So when I first did this, I brought it down here and I thought, we haven't got to the 886 fib and these really important highs yet, 71.43. And so for me, you know, that's kind of like my bull bear line, and that's probably, if we look now quadruple top here, pretty good resistance, 71.443. However, if we count this as a new swing lower, so this is our first one, we did in fact reverse at an 886 fib of this swing. So I would say we've got two levels here. If we continue above 69,400 or 70,000, watch out at 71,443. But at the moment, this is pretty bearish price action. We've got what's called a swing failure pattern. So a swing failure pattern is where you make a high and then you make a slightly higher high, but you can't sustain it and keep going. And Bitcoin loves this pattern. Let's look left here at what we did in March. We made a high, a slightly higher high, couldn't sustain it, reversed. In May, we made a high, tagged the high, slightly higher high by like a tick or two, I think. And down we went. And so here we are doing this again, I'm afraid. And so this is a kind of wonky double top swing failure pattern. The most bullish thing that we can do here, having done, look, you know, when you've what looks like 5 waves up, it means that these previous swing lows, which are around 63,500, are pretty important, but we could actually come all the way back to the 200 moving average, because this is suggesting that this whole swing from the low at the beginning of July is over, and we could see a bigger pullback here. Remember, this is just pulling back into our daily moving averages. One thing that makes me always a little bit nervous is when I look at, as you know, I'm always measuring between the swings. This was a very nice ABC equal measured move. And when I look at these rallies, if we reverse it an equal move, so in other words, if I measure this swing low to high, and then I project it from this low that we've just made, we've reversed at the equal measured move level. So these two rallies then are equal in price and pretty equal in time as well. And when you do that, that makes for me the really important support here at 62,985, basically 63,000. And that's pretty interesting as well, because if we measure our fibs, so first off from this high to this low, if you reverse at an 886, your first target is back to the 50%, and that's the same price. So that adds a lot of weight to if we continue lower instead of just sideways consolidation. 62,700 is where we possibly could come back to. So you need to think about, where did you buy Bitcoin, and are you going to be okay and comfortable, you know, coming back down to here? Now, what would tell us that we are going back here? Well, if you were a candlestick trader, right, when you have a big green thrust candle like this one, as long as you don't close more than 50% back of this candle, you are still going up. And so for us, this is just sideways consolidation today. It's been very volatile, but that's where support. If we look at the previous big green thrust candle, here's this one here, and look at where we pulled back to. Was it really ugly and volatile? Yeah, it was really volatile, but we held it on the daily close and we were still going higher. And so I'm going to say we're still going higher unless we close underneath kind of 67,000 and 50% back of this big green thrust candle. It's a really good place to look for buy entries. Like, for example, here on the July, we had a really big up day, thrust up day, 50% of this. If you had put an order, or if you had looked for support 50% back of this candle, this was a really nice entry. It's called a Maribosu candle, which means, and the best ones don't have any tail, either top or bottom. So that's what we're looking to hold. And underneath 67,000, then I think that there is a risk that we have a really kind of bigger corrective pattern, and potentially back to 62,700, potentially lower. That's my, this is just bunching up really in a corrective pattern. Now, the other way we could look for where we might pull back to is if these two swings are equal, right? So I've talked about this before, corrective patterns, right? So if you're in an upswing, normally you look for three waves. So a simple one would look like that. Sometimes though they look, so you're in an upswing, they look a little bit sideways like this. I haven't drawn that very well, but sometimes they look a little bit like that, and you keep going. And sometimes they kind of splay out a bit. So the key thing with these corrective patterns, so when you go up and you do this and you do this and this, the key thing that this one in the middle needs to look like three waves. And sometimes when you make these corrections, let me start this again. Let's go. You do this, right? And here's your first pullback. And so here's your three waves. And then you make another pullback. And so sometimes those ones in the middle get a little bit wonky. So they can look like this. And then so you have first swing, 1, 2, 3 for the middle, and third swing. And there is a little bit of risk. How the tell for that might be happening is when these two swings are equal. So if we measure from here to here, you can see that they are exactly equal. So we can say that we are like probably in that pattern if we drop underneath this 63,000 level and get stuck underneath it. Now that's annoying and disappointing, but the good thing about that is because Bitcoin makes such reliable measured patterns, if that's what we're doing, in other words, if we drop underneath this 63,000 level, we can measure this first swing lower, project it from here, and we could give ourselves some targets. First one is going to be 59,000. Second one is down here at 52,800, where this swing and this swing will be equal. So if the correction continues into September or through August like we saw last year, that's the two levels that I'm looking for at the Bitcoin. At the moment, this is still pretty bullish structure. We're still trading sideways. We still haven't reached this really kind of tough resistance level around 71,600, and we're trading sideways with a bit of a pullback underway. And if we can look at previous pullbacks, you can see even on lower time frames, this one that they're usually three waves like this here. So far for this pullback, am I rushing to buy it here at these lows? No. And the reason is we have dropped in a straight line, and I really do like corrections to look like three waves. So I want to see something like this. It might not look like this. It might look something like that, everyone's going to go, oh, the world's ending, it's a head and shoulders pattern. But as long as we don't break the support, again, we're still in an uptrend, and that big daily Maribosu line is holding. So Bitcoin, just this price action today says that we are not actually breaking out yet. But yeah, we've got some really nice structure. It's just a matter of where we're likely to pull back to. If you put a gun to my head, I would say with this kind of double top swing failure pattern, it is quite likely that we come back towards 63,000, and we'll see what we do there. Okay, so let's take a look at ETH. We could not be, you know, when I look at this, we could not be in the middle. So we've got this big consolidation that started in March, just like Bitcoin's pullback started in March, and we have been in a tighter and tighter range, bunching up our daily moving averages and trading sideways. I can't say this enough, you know, don't diddle in the middle. I think potentially this could be a big triangle consolidation pattern, which means, you know, that we could be about to begin another leg higher. So we see something like this, and then we could see something like this. This is what some summer trading ranges look like. That would mean that we make one of those 5-wave correction patterns that you make in wave 4. One of the cool things about that is this 5th wave, the next swing lower, is not likely usually to come all the way down. It doesn't usually. Sometimes, or not all, I would say not usually, but quite often they can be shortened, so we make a lower one. But at the moment, honestly, with flat moving averages going completely sideways, I think this is a correction and an uptrend and a big wave 4 in ETH, but I don't really have any signal to buy here. If I look at what the shorter term patterns are looking like, again, for me, this looks like the first swing lower, and now we're making a little 3-wave correction, and I wouldn't be surprised to see another swing lower before we attempt to go higher. I could be wrong when I look at fib retrace levels, like when I'm not sure what we're doing. So I take the most recent swing. So that for ETH here, this is this low to high, right? And there's always that problematic little golden ratio zone between the 61.8 and 38.2. And so we've bounced from the 61.8 level. For me, you know, holding outside of this range is pretty bullish. I think it does potentially point to another leg higher, but I don't like this 3-wave pattern. It's just not a good enough buy setup for me yet. I think we are on a little bit of a channel, and if this channel breaks and we see another swing lower, that would be a really cool buy level, even if it just double bottoms or something like that. Now, we could end up with a really strong rally from here. Yeah, just not quite a good enough signal for me yet. I think it's a bullish correction, but I'm just not ready to buy it yet. I think, or buy more yet. I do hold some. Waiting for the ETF rally. There isn't really any reason to be, you know, holding above the 200-day moving average and sideways mixed up in the daily moving averages is not an ideal sell pattern at all. So ETH is not a sell pattern yet. It could turn into one, but for me this is just nasty choppy sideways, and I'd prefer to sit on my hands and wait for a much better signal. So just like Bitcoin, some of the Bitcoin derivatives or you know, BCH and BSV have seen some really nice moves lately. Let's talk about why they might be doing that. One of them, BCH. So BCH, the talk wasn't it, that it was going to be really badly hit by the Mt. Gox reparations and so on, and to be honest, it hasn't. Now, maybe people were selling it because of that. I don't know. What we're seeing is a pretty interesting squeeze. Now, in terms of weekly moving averages, this is a pretty bullish signal. You know, where momentum is moving higher. We bounced from the weekly 200 moving average, bounced from these previous lows here, looking really strong. So when I'm not sure, I'm going to put my fibs on from this high to low, and I'm going to look for us to go level to level to level and climb up these fib retrace levels like a ladder. So I want to buy pullbacks to each one of these fibs as well. So here we are at the 38.2. We could have a little bit of a pullback here, but we're going to stay bullish as long as we stay above this 236 fib on a back test. So if you're looking to buy some, that would be kind of my first ideal place to look for a pullback to. If we close and continue above this 38.2 fib level, which is at 452, I think we could continue squeezing higher to 50% retrace from this high to low. That takes us up to the 500 mark. And so I'm just going to look at this as going level to level to level until then. One of my favorite trade setups is a 50% retrace with an equal measured move into it. So if I measure from this low to high here, sorry about my dog. Here we are. We could squeeze a little bit higher, but I actually like it back to this, 3 waves back into this 50% level. So there's room either way, but 450 is key. Above 450, 500, above 500, 550, and so on. It's doing those big round numbers pretty nicely in BCH, but again, a little bit too stretched on the upside for me to buy here. However, when we're in a squeeze, it could keep going. And, let's face it, if you've waited, I don't know, a decade to get your money back, and your money's going rapidly higher in value, you are not going to be in a rush to sell it. You're going to wait and see how high it can go, I think. Let's talk about BSV, because what a cool pattern this is. I posted this chart earlier today. So if we look at these previous lows here, the launch lows back in 2023 in BSV, it's really interesting to me how we lost the support from those, because when you go beyond a level that you are expecting to be support, the most common pattern that you make, or support or resistance, is a head and shoulders. So if you're expecting it to be support and you overshoot, an inverted head and shoulders pattern is the most common, and vice versa. If you go beyond a high that you thought would be resistance, the most common pattern you see is a head and shoulders the other way. So if we continue higher here in BSV, and let's face it, it's looking pretty strong, then I would, as long as we hold this neckline now, which is at 47, I'm expecting it to continue higher to 67 next, which is back to the daily 200 moving average, and the next big fib level from the high in March 2024. So the thing is, these 236 fibs can be pretty strong medicine. So we are going to have a little bit of a knockback here, but closing above it says we keep going higher. Is this a bearish reversal yet? Yeah, no, it's just consolidation. Because this swing here was 5 waves up, and because this looks to me like 3 waves back, I would expect this to be 5 waves this next swing as well. And so far we're only in 3. So I certainly wouldn't be selling this, even though this is a 236 fib. I would look for a topping pattern. So if you're holding this, looking for it to go higher, lest we get a topping pattern, I would try and hang on. I think this looks good to perhaps overcome this resistance. We might, though, remember, corrections are normally 3 waves, so be a little bit patient here. So far we've got knocked back from this level. We could see, a corrective pattern like this, and then before we keep going, or even a bigger pullback. But 48 is where we're wrong. And this is a bigger reversal for BSV. So that's not the, some of the meme coins have had some pretty good days as well. Let's talk about a couple of them. So the first one, I am gonna, where have I got them? The first one I'm going to take a look at is Brett, which, whenever I'm looking at chart patterns, I'm always looking at very nice, just like Bitcoin, very nice 3-wave corrections, because when you get above the moving averages, it says we're on our way higher again. And this is a little bit tricky, like Bitcoin, because we've had this lovely, I think, 5-wave rally, but this really strong move. If we look at where we are in terms of fib retraces in this coin, this was a textbook 50% retrace problem is we've gone 50% higher and now we're just consolidating in the middle. So we want to know, is this corrective pattern over and are we on our way up again in breadth? One of the first things I wanted to see was closing above this daily 50 moving average again. You can see previously around this level, it's been pretty strong support and resistance. This is on the daily. Some people are trading breadth, I noticed, with exchanges that don't have this much price history. One of the good things about TradingView is you can switch to another exchange and see better price history. So I would advise you to do that if you are looking at this. So potentially you could say, well, this is a down channel and here, you know, we tagged it twice. Here's our third touch. Now, sometimes people will move it out and so look at it this way and say, well, this is our down channel here and we haven't broken out yet. I would agree we're struggling. Whichever way you draw this, we are struggling a little bit. If we draw it as a parallel channel, we are struggling a little bit. Haven't broken out yet, but because we have this really strong move in this textbook three-wave correction, I'm waiting to see if we can. Do fib retrace levels help us with this correction? When you have a three-wave correction like this, remember you put your fibs over both swings, so high to low. And again, here's our 50%. So we are really kind of messing with these levels, aren't we? 0.147 above it, above 0.147, I think we are going up for now. A little bit tricky and sideways. Pretty nice bullish structure for this one. Though, what about Pepe, which is one of the forever favorites? Where have I hidden Pepe? I've got too many charts open. Let's take a look at it from scratch, because just to prove that I don't need my scribblings, we'll take a look at Binance. This is another chart. Look, so trend moves are normally 5 waves, corrections are normally 3 waves. So if we go from the lows here in Pepe, from the all-time low, you can see we made 1, 2, 3, 4, 5, and we've made a 3-wave correction back. Now, one of the things, sometimes you wonder, you know, because this is one whole complete swing, one of the things I worry about is this first 3-wave pullback isn't enough, because you quite often come back to the bottom of the previous wave 4, which in Pepe would mean back here to 536. Now, it's clear to me that we are having a little bit of a fight here in the middle. So if I put my fibs on from high to low, sometimes it's the 50%, sometimes it's the 61.8. Here we are halfway back this move. So we know that mean reverting markets tend to keep mean reverting. Looks like we made 5 waves up. So if we say 50% back of this swing here, would mean a fat 1035. That's where we kind of need to hold. And then we would have a pretty balanced looking continuation head and shoulders pattern here for Pepe. Sorry, I'm not drawing it very well. Something like that. Okay, and while we are in the middle here, we're kind of in the middle of no man's zone, aren't we? So I would say back to that kind of 1000 level, if we get a nice 3-wave pullback to here and then turn higher from here, that would be a really nice bullish pattern to look at buying Pepe, because of this bigger daily chart bullish structure. And if we don't hold there, then the bigger bullish pattern you're going to be looking for is a double bottom and a retest of this 200-day by the time it gets there. So yeah, a little bit of a bigger pullback in some of these meme coins. Now, I was watching to see if Nvidia today could have a really nice bounce, because it's made a 3-wave correction, has not. There are quite a few AI coins that I have got my eye on, but I do like an inverted head and shoulders pattern bottom. And this one, TEAI, not associated with it, 01 token. This is, if we take a look back, this is making, I think, a very nice equal measured move pattern. Now if we measure this whole pullback that we've made from the highs here, so if I measure from this high to this low here, this here to here, projected from here, we're sideways at the 61.8 level. That's a really good correction for ABC corrections. If this third swing is 61.8 of the first swing, I really like how we've made a higher low. I like how we're trying to close above this daily 50 moving average, and this is potentially an inverted head and shoulders pattern here as well, which is a pretty nice bullish structure. And I would say that we are on our way higher again. Or, you know, if you buy this on a lower time frame pullback, like we're making one now here, for me, I put Heiken Ashi on. I wait to look and pull back into these moving averages, and that is a buy trigger for me. So if you do that, your first target is going to be 0.34, a retest of 0.34, and if we can close above 0.34 in zero token, then if I put my 236 fib retrace on from this high to low, first target is going to be these lows, this quadruple bottom, and this 236 fib level, which is at 0.467. If we close above 0.467, I'm looking for 50% and back to these highs here in the middle at 0.78. So again, I think this potentially is signaling a pretty nice bottom. And if we look here, we did the same. It wasn't a failed trade because we only got up here. You wouldn't lose money on this one. Once you see it reversing, you kind of get out of the way, take profit. But because we've made 3 and that's such a common pattern in a correction, I'm looking to see if this 101 token, DEAI is the ticker, is going to go higher. Okay, so that's what's on my radar. Let me know if there is anything you'd like me to look at and cover. I really am going to try and go back to lives and record some lessons.